Hey guys, how's it going today? Just want to give you an update here. It definitely didn't take me long to reach my little goal of having 100 holdings. Um, so just one day from my last video, I think. I think I did one yesterday. Anyways, I now have, if you look at my pie, exactly 100 holdings. So I have 100 different companies right here, and each one of them is 1%. Well, it's my target to be 1% of my entire portfolio. Um, so I couldn't resist. I wasn't really, I can't say I wasn't really looking because I kind of was. I was looking at other businesses and stuff. Um, but, anyways, long story short, I get a lot of my picks of stocks and stuff that I want to research and decide whether I want to add to my portfolio or not from either the news articles in finance or in stock market, or from like dividend.com, researching stocks through there, finding, what best ones they think are best, and just going through, or the history, or the longest performing dividends and that type of stuff. Anyway, long story short, there's some things I did, and for a dividend portfolio, one of these is quite surprising because it doesn't really belong. But anyway, long story short, here we go. I uh, I decided to add. Let's go by name so I can find it. I added J.P. Morgan Chase and Company. So I forgot what it was. Something on the internet caused me to think, why would I not invest in the biggest companies of every sector, like the biggest companies that I could find in every sector? So I started doing research on that. And then I looked at the top three biggest companies in, say, finance and one in industrial, et cetera, et cetera, et cetera. And I only had like four or five slots left in my portfolio to reach my 100 holdings. Um, so I'd be pretty selective. But what I did find is I found J.P. Morgan is the biggest bank in the United States right now, um, and it's performing perfect. Um, it looked good. I had to have it, so I threw J.P. Morgan in there. I mean, why not own the biggest bank in the United States? Um, then I added. I wanted like I have quite a few REITs in my holdings, not a lot, but I have. I believe nine now, but I had eight, so I was looking for the biggest real estate company that I could find, and the best and biggest I could find was PSA, which is public self storage. Oh, right there, PSA public self storage. Um, their financials, everything looked awesome. I believe their yield was pretty decent. And they are the one of the biggest real estate companies out there right now. Believe it or not, public self storage. Self storage is a big business, so I had to have them. Then the other thing I added was a healthcare company. I looked at the top three biggest, and I decided not to go with the biggest healthcare company out there, because the second largest healthcare company in the United States actually had much better financials and better growth in its history. And then to top it off, had a higher yield. So I added UNH, United Health Group Incorporated. Um, they uh, they are the second largest healthcare company in the world, or not in the world, in the United States, and they were just slightly behind the number one, and they just look much better for an investment. So I grabbed them. And then I wanted transportation. So I was looking at the largest transportation companies in the U.S. And what I found, really, if depending on what you're looking at, whether you're looking at railroads or something else, but for the most part, what I looked at was just the largest transportation company in general, and I found it to be UPS. So I mean, UPS with combine that with all the deliveries and shipments coming from Amazon, another $1 trillion company out there. It's just it's not going anywhere. UPS is the biggest parcel service out there, so I had to have it. And then the one surprising one for a dividend portfolio is one that does not pay a dividend. And I'm not a big fan of the FANG stocks, Facebook, Amazon, Apple, Netflix, et cetera, et cetera, because they're all growth and most of them don't pay a lot of dividends. I do have Apple. I had Apple a while back, and they do pay a dividend. And I mean, why not own them? They are a dividend stock, and they are still growing. And I fear they'll be around for many, many years to come. Um, but the one I did add was Amazon. Should be right here. There it is. I had Amazon. Amazon does not pay a dividend at all. So this is my one and only growth stock in my portfolio. Like it's only there to grow. And what really convinced me of this is, I mean, Amazon's going to own the freaking world. Um, I mean, I said that about Google years ago, and Google kind of does. But I don't own Google, by the way. Um, but Amazon, they're just so diversified. Like you own this one company, and you are in a lot of different businesses. Um, from retail, all the sales they do, the storage or the cloud storage and servers, and now Whole Foods retail, Whole Foods and groceries. And then they just had this big article on their new Echoes and their new smart home that they're coming out with. All these different things that they're adding for your smart home. And at first I thought, okay, this is stupid. Who would want their microwave to have an echo in it and talk to you? Who would want to, okay, there's all kinds of lights out there that are already remote where you can plug a light into this little thing that you plug in the wall and then you can turn it on and off. So they had one of those. I'm like, what's the big deal here? But again, it's kind of unique, and I really think they're on to something here, especially the direction we're going with smart homes and more technology in our homes. Um, I know there's a ton of Echo fans out there, Alexia, whatever it is, Alexa. Um, I don't personally have one. I have Siri on my iPhone, but whatever. I very seldom ever use her. But anyway, their products are quite innovative. Like they're Apple innovative. So think about this: a microwave, right? And instead of you put your potato in or whatever food in, and then you just tell your microwave to cook it for certain amount of time. You don't push any buttons. You just tell it, and it does. And if you want to cook longer, you just tell it add some time. Or I mean, that's a really neat feature, and people are going to like that. I know they are. Um, then the same thing with the wall plug thing. You plug it in, and you can plug a light or a stereo or a television or anything you want into it, and then you just tell it to turn on or turn off. And it could probably do, and I think they're planning on making it do even more than that. But I mean, you're just speaking and telling it to do it, and it does it. I mean, pretty soon we're just going to talk to our home and tell it what we want. Hey, lock door. Hey, unlock door. And that'll be a little more secure risk, but I mean, we'll get there to we're doing that, not just lights on and off. And the microwave thing is kind of ingenious. I mean, you think it's kind of stupid when you think about it in general, but when you think about the how people are going to want that, people are going to want that. I'm sorry, they just are. I'm going to want it. I'm probably not going to buy it, but I would probably like it. And at that, it's so cheap. Like they're planning on bringing out that microwave for like $50. Um, they are just being very innovative, and they are in so many different businesses and so widespread. There's a reason that they are $1 trillion company or reached a trillion. I think they actually dropped the market cap, but still, there's a reason that they got to $1 trillion. And I see a lot of growth still coming from Amazon. I mean, their stock's at over $1,900, almost $2,000 right now. And let's see, Amazon. It got up to 2,050 at one point, but right now it's at 1915. It did drop today, 1.51%. I don't know what all happened in news today for or whatnot, but I don't care. The fact of the matter is if they don't do a stock split, which seems to be the thing to not do nowadays, I don't know why. But anyway, if they don't do a stock split, I see this stock easily doubling. I see it easily getting to 4,000 at some point in the future. I mean, the biggest stock price I've ever seen is Berkshire, and nothing. I don't think anybody's ever going to reach that. But Berkshire Hathaway, that is not what I was looking for. Let's try it again. It's not the B shares, is it? No. They gave in and made a different B version of their shares for people. Nope. Oh, maybe you can't even buy their main share. Yeah, you can't even buy their main share in M1 apparently. But let me show you. Let's see Robinhood. I'll bet you. You probably can't even buy it here. Yeah, you can. Berkshire Hathaway Alpha. It is $331,336 for one share. That is amazing. So anyway, long story short, Amazon won't get there, but Amazon has so much potential. I had to own it. I had to own it. So yeah. So those are the last five stocks I added to my portfolio to bring it from 95 to 100. So now that I have an even 100 companies in there, I'm really confident about 90% of them, just from the little bit of research I did, or a lot of research I did on some. And then the other 10%, they're good companies. I already know they're good companies, but it is possible that they're a little riskier than others. So overall, my diversification, I was worried because I just kind of researched companies and threw them in one at a time, and I didn't look at my diversification in each sector, like industrials or healthcare or consumer discretionary, that type of stuff. But when I added them all up, I actually own a I like my diversification and exactly the percentages they're in. Actually, I really like them. So I have 10 consumer discretionaries. I have 19 consumer staples. So consumer staples are what, is always going to sell, even in a market downturn. I only own 3 energy stocks. These are like mining or oil, direct oil companies, that type of stuff. I own 11 financials, which I wanted a good exposure of financials in my portfolio, so I'm pretty good with that. It's not too high. It's 1% higher than my or one stock higher than my consumer discretionary. 6 healthcare, which I think is probably might be a little too much. I mean, exposure in healthcare is a little scary to me because the government, you never know what kind of healthcare regulations are going to come out in the future. But they are a very good investment, and everybody's going to need healthcare forever. So, I mean, I think I'd probably prefer 4 than 6, but I'm happy with those 6 companies. And yeah, I'm pretty happy with those. And I have the 3 biggest in there: J&J, Pfizer, and AbbVie. Well, I don't know if AbbVie's one of the biggest, but they're pretty close. Then I have 16 industrials, which is pretty high, but they're pretty diversified amongst themselves. Like they don't all make the same thing; they're all making totally different stuff, and I think that's a good mix. I have 5 more material companies, which just make materials for industrials and other companies. I have 7 tech stocks, everything from like data processing all the way up to Microsoft and Apple and all them. I have 14 utilities. Utilities are electricity and gas and water and all those, and they're always going to be around forever and ever because people always need those. Um, and then last but not least, I wanted real estate, and I already had some REITs in my portfolio, but I added a few more, as I mentioned. That public storage is actually a REIT because that is real estate. So I'm real excited about having public storage actually. But I have a total of 9 real estate stocks or REITs. Real estate investment trust is what they're called. So yeah, I'm pretty good. I love my diversification there. I think it's pretty damn good. Um, The only thing I haven't solved, the only problem I haven't solved is how to keep track of each company paying the dividends. Like I know when they pay it, it'll show up in my activity and I can easily track it that way. But like I want to know, like right now, it'll show me how many dividends I've earned but haven't gotten paid yet. And I'd like to know what companies I've earned dividends on before I get paid. So that's one thing I like to do. The other thing is tracking out of 100 stocks. How do I know which ones have paid this year or this quarter and which ones haven't and that type of stuff. So I'm still working on that. I did some searching on the internet for ways to track it. I found one little dividend tool that's amazing, but it's very expensive. It was like 30, I think it averaged out to 32.50 a month or something. I'm like, I'm not paying that. Especially just to get a notification that a company dropped or raised their dividend. So I'm still looking for a good solution to that. The only other thing I noticed is and my tab already closed here, and I don't really want to log back in. But the other thing that I noticed is there's like a 4 cent discrepancy in accounting between my portfolio front page value and my holdings value. Hell, let me log in and show you. Nope. Sorry about this. I didn't think it would time out on me. So here we go. Let me get logged in here. All right. So here's the value of my portfolio right now. It's $1,131.02. It says I have a gain of $1.63 overall. All right, and this is all fine and dandy. So I look at this. It says I have a net cash flow of $1,129.49. That should be the amount that I have spent in buying stocks. All right, and they have a market gain of $1.53, which brings the total to $1131.02. Okay, great. I look at my gains. All right, I have a market gain of $1.53, and then I have 10 cents earned coming. So $1.53 is the number I'm looking at here, right? And over here, $1.53. But if I go to my holdings, shows my total cost was $1129.53. Well, wait. This says $1129.49. So that's different. And then if I take my handy dandy calculator and I take my 1131.02 and subtract my 1129.53, it shows I have a total market gain of $1.49, not $1.53, where this says. So there's 4 cents missing somehow between this value and that value. Now this value is correct. So this is my actual cost of all the stocks I own. And I know that because I have 47 cents in cash sitting in my account and I've deposited $1,130 total. So 53 plus 47 will bring me up to 1130. And there's my 47 cents cash sitting in there. So I know that is the correct number. But why under value on my portfolio it shows a 4 cent difference? And over here on my market gains, it's saying I gained $1.53 to bring it to that value. So I wrote support, which is pretty easy. You just come down here, hit help, and you can automatically come in here. You type whatever you want, hit enter, and then you just hit contact. So I wrote them to try to figure out what that's all about because I'm not quite sure what that's about. The other thing I wrote them is asking how I can find out what companies I've earned this 10 cents from, because I've earned it, but they haven't paid it yet because they won't pay it for a week or two or a month or whatever. So yeah, I wrote them to try to find out how I can find that out. And I also put a suggestion in to just have a section for dividends up here or under activity or something that just has a summary of all your stocks and dividends and tells you all details about them. Preferably have dates, like ex-dividend dates and that type of stuff for each of your stocks. So anyways, that's my current status. My portfolio is done for now. I thought about creating another pie and slicing it in here instead, so that way I could add more stocks. But the more I thought about it, somewhere I heard that you want every company in your portfolio to be significant. So if it's any less than 1%, it's not worth having. So 1% it is for every single stock. And in order for me to buy another company and add to this portfolio, I need to sell a company I own. Now, that makes it a good thing, in my opinion, because that means that that company that I want to buy has to be, I have to want it so bad, and it has to be so good in financials and everything else, has to be so good that I'm willing to sell a company I already own in order to purchase it. So from here on out, this is my portfolio. Unless I run across a company I just absolutely have to own, like Amazon, which I already have in my portfolio now. So I don't need to worry about that one. But yeah, so that's the current update, guys. I hope that this helped and gave you a little more idea of what's going on. I obviously was up today, and overall I'm up a little bit by either $1.49 or $1.53, depending on how you look at it. I'm going to say I'm up at $1.49. I have 10 cents of dividends that are due to me still. So yeah, pretty good so far. And I've only been doing this for what, 4 days? 1, 2, 3, 4, same day. So 4 days. So yeah, I'm pretty happy with my Roth portfolio here, and I'll keep you updated. Thanks, guys.